Picture this for a second. It's day one. You're finally stepping into the wild world of stock investing. You've scraped together some savings, made the choice, and you're thinking, right, I'm going to do this. So you pull out your phone and bam, you're just slammed with an absolute wall of noise. You got live stock prices jumping all over the place, numbers flashing green, numbers flashing red, and these insane charts that look way more like alien hieroglyphics than actual financial data. Throw in the screaming financial news, a million expert opinions, and just endless social media hype. Yeah, it's a completely overwhelming sensory overload. So, to get through that, today's agenda for this explainer covers 1. Surviving the initial overwhelm, 2. Phase 1, the foundation, 3. Phase 2, action and emotion, 4. Phase 3, building consistency, and finally, 5. The ultimate investing mindset. Let's get to it. All right, Section 1, Surviving the initial overwhelm. Honestly, when you're staring down that absolute avalanche of data on your first day, your brain just short circuits to, where do I even begin? You feel frantic. Like, what if you make a massive, costly mistake right out of the gate? What exactly are you supposed to do with your hard-earned money right this second? Well, look, if that knot of anxiety in your stomach sounds familiar, you're exactly where you need to be. Because the habits we form in these crucial first 100 days, they become the literal bedrock of your entire financial life. Giving yourself the right start is just a massive, massive advantage. Moving on to Section 2, Phase 1, the foundation. Okay, let's dive into this. Notice the deliberate structure we've got here. Days 1 through 10, those are purely to learn the basics. Days 11 through 20 are where we define your goal, and days 21 through 30 are to build your system. We are intentionally taking this super slow right now to build a rock-solid, deep understanding before doing anything crazy. Because, and hear me out on this, guessing is expensive. This is a stark warning. It's exactly where so many beginners make their absolute most painful mistakes. You know how it goes. People see a wildly popular meme stock blowing up on their feed, they get hit with a massive wave of FOMO, and they just blindly buy in. But look, if you don't actually know how that business generates revenue, you are investing. You're literally just guessing. And the stock market, yeah, it'll make sure guessing costs you dearly. So once you hit days 11 to 20, you're going to face a massive fork in the road. Are you building long-term wealth, or are you chasing short-term trades? Pinning down your specific goal early on is absolutely critical because it entirely dictates your future strategy. Having a crystal clear, long-term purpose, like aiming for financial freedom or a comfortable retirement, drastically cuts down the urge to make impulsive, emotional decisions later on. Now, your foundational checklist for days 21 to 30 is actually pretty simple. It boils down to basic savings, emergency money, and absolutely zero desperate money. Seriously, if you're going to need that cash to cover rent next month, it does not belong anywhere near the stock market. You definitely need to set up a safe, reliable brokerage account, sure, but investing with desperate money, that just creates completely unnecessary, crushing emotional pressure. Don't do it. All right, Section 3, Phase 2, Action and Emotion. This is where we shift from theory to reality. Day 31, you enter the market. Days 32 to 45, you start small. And days 46 to 60, welcome to the psychological trial of controlling your emotions. For this whole phase, your magic number is literally just 1, a single, remarkably tiny first investment. Why just 1? Well, because you need to feel that very real-world gut punch of losing 50 cents and also the little thrill of making a buck. Keeping it small completely takes the financial pressure off, meaning you can just observe, learn, and really get familiar with how you personally react to the market moving around. Now, once your money is actually in the market, things get incredibly interesting. Doing nothing is the smartest decision. Actually, scratch that. Doing nothing is the hardest, smartest decision. During days 46 to 60, you're inevitably going to watch your portfolio bounce up and down. Your brain is going to absolutely scream at you to do something. It'll say, I gotta buy more right now, or I need to panic sell. But true discipline is learning that not every single market swing requires a reaction from you. Sometimes pure restraint is hands down your greatest asset. Moving to Section 4, Phase 3, Building Consistency. We're in the home stretch now, and it's all about deep analysis. Days 61 to 75, you study companies. Days 76 to 90, lock in that consistency. And days 91 to 100 are set aside to review absolutely everything. This right here represents that mature transition where you move from initial chaos to thoughtful self-reflection. During days 61 to 75, we plunge significantly deeper into the actual mechanics of this stuff. Whenever you're evaluating a company, run it through a really strict checklist. Ask yourself, what does this company actually do? How exactly do they make money? Like, are they selling complex software or are they just roasting coffee beans? Is the business profitable? And crucially, can it grow? Remember, you aren't just buying some flashing three-letter abbreviation on a screen. You're buying a slice of a real, living, breathing, operating business. By the time we hit days 76 to 90, you have got to build a solid routine. Real, lasting wealth isn't made by pulling off one lucky, massive gamble. It's built through the quiet, honestly, kind of boring routine of investing a set amount every single payday. So instead of dumping in one big chunk of cash and ignoring it for a year, realize that it's consistency, that steady drip, drip, drip that fundamentally compounds your returns over time. Which brings us to days 91 to 100. This is the time for radical honesty. Look back and review your last 3 months. Identify your mistakes. Did you buy something purely out of greed or panic sell because you were scared? Really dig into it, because successful investing isn't about being totally flawless from day one. No one is. It's about having the humility to step back, reflect, course correct, and actively figure out how to get better. And finally, Section 5, the ultimate investing mindset. Ultimately, this whole shebang comes down to emotions versus logic. The core theme of literally everything we've talked about in this explainer is designed to do one thing: replace frantic, fear-driven reactions with cold, logical, sustainable habits. If you can successfully nail down this mindset and build up that discipline early in the game, I promise you everything else in your financial journey becomes infinitely easier to manage later on. So, I want to leave you with this final thought. Will you focus on getting rich in 100 days or on becoming smarter? Think about it, because the true, lasting return on your initial investment isn't actually the money you make. It's the long-term knowledge you gain. Focus on getting smarter, because that right there is the exact mindset that will actually transform your financial future. Thanks for hanging out with me for this explainer, and I really hope this roadmap empowers your investing journey.